Let's take a look at a real life example. It's late 2022. Bitcoin has been falling for most of the year. Sentiment is at all-time lows. Every other headline is crypto's dead and this hack and this exchange closes down and everyone's crapping themselves. People are either paralyzed or they're selling and the price is dropping sharply. But if you weren't looking at the headlines and you were actually looking at the data underneath it, you'd be in a very different position and you certainly wouldn't be panicking. This is what we saw. Short-term holder cost basis was well above spot. Recent buyers were deeply underwater. MVRV was below 1. SOPR was below 1. Coins being sold were being sold at a loss. Realized losses were spiking. NUPL was in the capitulation zone. Open interest had been flushing for weeks. Funding rates had gone deeply negative and were recovering towards neutral. In short, the terrible time had passed, right? This was now not the time to start dumping your tokens. That time had passed. We were getting set up for a positive spin. While everyone else was asking Twitter what to do, you were looking at the market and seeing that weak hands had already sold. Coins had moved from anxious to patient hand. When the derivatives market had already been cleaned out, you had a framework and that framework was telling you this looks like the bottom is in. So you sized in methodically over time. You didn't rush. 18 months later, Bitcoin was at an all-time high after a slow grind up. Now,